Hello, folks. Brandon Chapman with you today. It's another Theo Night video for Wednesday. What date is it? November 9th, the day after the midterm elections. How unsatisfyingly, if you watched the coverage last night, you're like, is anything going to be decided? The answer is, of course, no. And then they say days to weeks. So anything more unfulfilling than watching an election and watching no results? Maybe a few. You got a sense, maybe, but who knows, right? But I walked away very unfulfilled by the election. And looking at the market today, down nearly 2%, maybe the market's a bit unfulfilled as well, as we're reacting relatively negatively to whatever happened yesterday or whatever mire or muck we're currently in. And boy, looking at Disney topping the list of decliners today at 12.5%. We'll circle back to that, but that's certainly one of the issues we're seeing right now is that this is a very middling market, meaning what? Normal average, an average what? An average bear market, and we may only be halfway done. Anyway, so we got a number of stocks we're going to look at as part of today's video, and but anyway, unusual option activity, etc. So let's get rolling. So with the S&P down nearly 2%, what's the VIX doing right now? VIX is moving modestly higher, hanging around the 25 mark. It just seems like still institutions, generally speaking, are wanting to maintain their upside exposure and not really desiring to buy or hedge with some negative delta right now. Not exactly selling volatility. We're hovering on the 25 mark. But the question becomes, is today's selling only a precursor to buying as we enter the end of the week or possibly going into next week? A lot is going to depend upon what's going on with the bond market. If we look at TNX, what you'll see is that treasury yields today were basically marginally higher on a rather unstellar 10-year treasury auction. And again, where are yields going to go? We are relatively oversold right now as we're pricing in and trying to factor in, where is the Fed taking us? Are they taking us to 5%? How soon, etc. The Fed funds futures right now, if you look at, we'll just look at the product depth /ZQ, you get a sense of where are they expecting us to go? Well, if you look down here, 95 would indicate what? A 5% plus Fed funds rate. And that's by when? About May. We look at the December contract here. It's about what? 96. What are we at? 95.85. So again, we're not even pricing, and we're pricing in what? 4 to 4.25. All right, great. By January, maybe 95.5, or it's getting 4.5% to 4.75%. I mean, so again, what you're seeing right now is there's going to be a little bit of time and some expectation that by early next year, we're going to see some rate increases and push the Fed funds rate closer to and above maybe 5% going into the spring. So it does create an opportunity right now where yields are extended. They've gone up a lot as there's been a lot of selling. And as we look at TLT as a proxy for longer-term treasury yields like TYX, is there a chance for a small pullback here? Certainly it looked a little bit more bullish earlier today, but obviously the news from the 10-year auction, maybe dulling the senses here a little bit, those bullish senses. But there was some significant bullish activity. Now, where do you get this stuff? I have a scan that I use that gives you some of the parameters there, but it could be 475 option symbols in here. I'll mess with it as far as various settings, but if we scroll down here, you can see that there's some TLT action among other things in this list. I got to go ahead of Tesla. Got to know my alphabet here. But notice here's one trade, for example, the Jan 23 101 106. Similar amounts of contracts or volume currently traded on it, greater than the open interest. That's a parameter of the search. But as we take a closer look at that information here for the January expiration, what you're seeing is, again, some expectation. Can TLT rally by January to approximately the 106 level? Buying the 101 call, selling the 106 call. It certainly seems like a reasonable possibility there, but I don't think you necessarily have to trade the possibilities of this thing going to 106. You might even be just looking for this thing moving to 100 or possibly even a 38% retracement of the bearish trend since July Even a move to 103 would help support the market a little bit and may help things turn a little bit more bullish heading into the end of this year. Again, there's risk to the downside. I'm aware of it. This is a bear market. This is only a bullish rally within a bear market or a bull trap. I'm fully on board with this, the notion that this is a bear market rally. But again, is it done? The volatility market suggests not exactly, and we may get a little bit of movement, but we probably got to see this turn around, and we need bonds to cooperate. Now, as part of this, gold has had a relatively decent week. On Friday, I have a ratios and things that I look at during my session on TheoTrade, and we're looking at the potential that gold, which last week we saw a bit of strength in gold relative to the S&P, looking at that strength to continue. And the way I look at this is a SPY plus GLD ratio. And as you look at this yellow line, as it declines, it shows gold is outperforming the S&P. And there was a breakout last week, and my expectation is that gold should have a chance to outperform here as the dollar pulls back from highs. That's what we've seen. We're seeing dollar pulling back, although a little bit stronger today. As a result, dollar pulling back, you would expect gold to have a chance to rally. And that's also what we've seen today. Yesterday was a big day. In fact, there was significant bullish activity in GFI that I discussed in yesterday's session. And today, again, another big breakout up about 12.5%, basically going the opposite in terms of direction and magnitude as Disney. Now, interestingly enough, today's trade in GFI has flipped a little bit. Look at a 20 Jan, 7,000 contracts, mostly bought at the $9 strike price against 1,600 open interest. All right, so we're seeing some bearish interest coming in today. Now, you have to understand, we didn't see a broader rally in GLD. You could look at KGC, you could look at GOLD, you could look at other ones out there, Newmont, the biggest mining company. We didn't get the strength in gold today. Well, why are we seeing such a big move in GFI? It has to do with the fact that there was a potential offer being made on Yamana, and there was some expectation that they may have a desire to match it. They decided to be more fiscally responsible. Let's dovetail that with midterms. Are we going to get more fiscally responsible in the United States? No idea. Probably not. But GFI wants to be. And as a result of not upping their offer for Yamana, stock's up almost 12% today. Now, enter the bearish interest at $9. So this is a point that if the dollar bounces off support, gold goes down, and we start to see the effect of that announcement wear off, we could see Yamana come in. So I told our members earlier today, I was like, yeah, we were bullish on GFI yesterday. You're up 12%. These are good points to consider taking profits in a little bit of a pullback. You take the two candles, you blend them together. The midpoint's about 950. That might be a decent point to consider picking up, because gold right now, we're about to enter a seasonally bullish period for gold heading into December and January. This moves a bit early, so I would not be surprised if we do retest our lows and run higher. Now, if we're really looking at the Fed pivoting and the dollar going weaker and interest yields on bonds going lower, if it's that scenario, gold should take off and break out. But we've got to see it to believe it. Right now, we do have significant resistance about 160. Looking at that possibly breaking out may give you another opportunity to go long to the 168, 170 level on GLD. And many of these stocks, like I just showed, may follow suit, but for GFI, it may take a bit of a retracement before it sets up more bullishly, possibly around 950 to make this another secondary rally. So again, gold a little overextended, in particular GFI, looking for that to pull back. Now, as part of the midterm election, there was a number of ballot initiatives legalizing cannabis. I think Missouri had passed, a couple of states it didn't. Not surprising, but companies like, for example, CGC, Canopy Growth Company, it's a Canadian company. It's one we've looked at before. In fact, in this video, back in the past, back here, I think even on this day here, I certainly talked about on our Wednesday at the close, back here on the 25th, we got a nice run. It's made a pullback. This company does have higher short interest. They did just go through earnings today in which they actually had a negative surprise, but is the possibility of seeing more opportunity in the United States for a Canadian company like Canopy Growth, being one of the bigger companies in this space? Can we see more upside here? You might look at yesterday's high, possibly today's high as kind of a trigger here. But there was some bullish trade that did come into CGC today for this weekly expiration, trying to really kind of pump the stock. 350 is kind of creating a specific level, or you could create some gamma opportunity if we were to break and sustain that 350 level to push the price higher. Well, previously the target was up here at about 4.25. We could see a bigger move towards closer to $5 if there was a short squeeze, all we've seen at other points over the last couple of years. But again, keying off that 350 level is being kind of significant for CGC. And again, on the scan, you can see a lot of this stuff. For example, like, again, this space, GRWG here at 11.0550. So again, it's another company that is in this space. Earnings came out. You go to the analyst tab here, consumer discretionary, hydroponic gardens, okay, greenhouse lighting. Just read between the lines there. But big breakout yesterday, another big move today. And again, these are companies we've been looking at for the past week in my sessions, but growing. This is even pushed from where I was on earlier today. This can kind of pull back to 480. We've made a run back up to session highs again. And so if we close, again, we're likely to close there. This does create maybe a potential breakout, overextend in the near term. But if we look at the option activity and growing, it was a $5 strike price for 11.0. So as this translates over to open interest, we do create the potential, and even in some interest popping here, the 5.5 strike, as we break $5, this can create that kind of gamma squeeze to push the stock higher to 6 or possibly even higher. So we're seeing, while the earnings on GRWG, it was better than expected a couple of days ago, the stock has moved a lot. But again, is there the potential that some of the other stuff coming out that's benefiting this sector could help drive it a little bit higher here in the near term? Yeah, possibly. So, again, it's overextended right now, but I thought it was interesting. It's an area I've been watching now for about a couple of weeks, looking for some bullish movement. We're finally getting it. So, again, we're still seeing bullish activity that may continue to drive it. As we circle back here to the commodity markets, today, CL is down. Inventory and productions was favoring lower oil prices. And so again, this is beneficial if oil prices can decline, pushing to 81, possibly 75. This would help create that bullish thesis for markets. It also creates a dynamic where XLE is down almost 5% today. This is one over the last week I've been talking about some in-out spread type opportunities, anticipating a little bit of a pullback. As you may or may not know, I was pretty bullish on energy back here, looking at getting back to prior highs. Companies like MRO is an example of one that had some bullish activity back here, looking and kind of targeting prior highs. We finally got to that 261 level, and today it's just being ripped lower. So again, it's one of those things where those in-out type spreads create opportunities where you're buying it in the money put, selling it out of the money put. You just need a little bit of a decline here so you can close it out. And so again, energy is kind of in that position still. We may see a little bit more of a pullback, but obviously as we enter winter, as things get colder, we have to circle back to some of these plays, both in oil and, for example, natural gas, which has also seen a little bit of a pullback here. I was back when we're kind of forming lows down here. We're looking at an upside call spread 8 to 10 for January, buying the 8 call, selling the 10. And now we're kind of getting the pullback, resetting that opportunity as the prices are becoming a little bit more competitive, to put that on compared to where it was a couple of days ago. again, the dynamics are not exactly changing. For the bearish, we're just seeing a brief kind of pause as things get colder and we start to see more demand for natural gas. This is where you're going to see additional upside. So I think this last couple of weeks is showing we're finding support and likely a higher low in natural gas. And of course, there's a number of natural gas stocks like Energy Transfer Partners, EPD, other ones that are experiencing a short-term pullback that can create opportunity in the coming weeks to set up for that bounce and potentially new highs. So again, that's kind of wraps up commodities and bonds. Let's look at some stocks. Let's take a look at Microsoft. So, Microsoft's had a nice little downward channel. We broke out of that this last week. Earnings weren't amazing. The cloud wasn't great. And now we're seeing it kind of rolling over today. And again, we're down about 2%. And enter in, if we just go to the scan tab here, we'll just find the M's here in Microsoft. But you'll see the 200 puts right here being bought, 30,000 contracts against 2,400. So again, out in the February expiration. So it's out there a little bit. Again, 31,000 contracts. Is this hedging? Maybe, but it doesn't really matter in terms of its indication of $200. And so this is a real possibility in the coming months that we see Microsoft decline. And we have to look no further than Disney to really kind of understand these dynamics that are playing out here. Here's a company that's seeing fantastic revenues. When you actually start to look at operating profits, there's real issues going on with Disney's profitability, and you're seeing it reflected in their miss, reporting 30 cents against 50 cents actual or estimate rather. So we have a situation where the company needs their park business to do well. The transition towards getting content out there more quickly is not exactly benefiting them, or it's more costly, and it's not quite there yet, right? The going to movies and other things are still not quite there yet. We go to the Analyze tab here for Disney. We scroll down to this Trephis. You see how things are breaking down. The media and entertainment business has grown a lot for Disney, but this is where we're having struggles in terms of profitability. They need this part of their business to hold up. And unfortunately, if we are entering recession, if this is the middle or the midterm for the bear market, we may see pressure here, fewer people going to parks as inflation, and soon jobs may become more of an issue, layoffs, etc. This may begin to hurt the company. And we've got net debt of about $43 billion. So what we're seeing right now is that there is uncertainty over the business of Disney. And you start to look back and we're saying, man, we're now at potentially going to trade near the 2020 lows or lower. And again, as we're seeing the stock down now 13%. So this is kind of a bellwether representative of consumers and again, just the general media business and the struggles, like, for example, like Meta is having. Now, Meta obviously is recuperating off the lows today. But again, there's real issues here for advertising, et cetera. And we're kind of getting this kind of high of the gap day. We may start to pull back here. Even there was some slightly bullish activity in the space. We're going to quickly look at JetBlue. JetBlue, looked like it was setting up to catch a bounce today, breaking through that. And again, on this type of scan, you can massage it. I opened it up so you can see kind of everything, but you can massage it to get fewer or more candidates depending on how much time you have. But you'll see JetBlue, 11 noves, 750 put, 56,200 contracts against 623. And again, this is a weekly option. This stuff can get reversed. We're currently sitting right on around 750. As we potentially break this level, it could create some gamma squeeze to the downside here as we look at maybe JetBlue getting to 7, possibly rolling back to 622. Probably not happening this week, but are we starting to see some of the bullishness we've seen over the last couple of weeks in airlines starting to reverse? And this is about the demand story, right? If we're at the midterm of the bear market, we're just about to see some of the more negative effects in terms of employment and that sort of thing, defaults, et cetera. Another one, this is one we've looked at before, is PAYO. PAYO is one that kind of hit. There was some option activity back here on the 15th of July. It also had a couple of days before earnings. It was a bullish. I think it was like a $7, $6.50, $7 call option. But anyway, stock ended up gapping up today. This has actually rallied a little bit, if I remember correctly, from where I was on with my session earlier today, but falling off a little bit towards the close. But we're seeing some bullish movement. And again, we'll see what happens tomorrow. I talked about this in my session earlier today, but on PAYO and NOV 750. So if you're wondering about option activity, is it indicating anything? Again, this is an example of some that came in pretty significantly today on PAYO for NOV. This is an area that I was pretty bullish on. Transfer. We're talking about transfer. Companies like Woo or PAYO is another one. Right here at the 750 call option. So we'll see what happens after the hours. I believe it's coming in after the close today. Finally, we're going to wrap things up. I got to jump in after the close. XLP and XLU. So again, on the scan, as you go through things, again, it takes some work to go through and look at, sometimes you kind of ignore the stuff like that takes time. SPY is another one. But, you can kind of come down and, you can kind of look at, ETFs as well. You can steer this search really easy. Instead of weeklies, you could look at ETFs and make it more pointed in some respects. But you see here the XLU trade. This is a 68 call, 8,800 contracts. And so if we look at the 20 Jan, 68 calls. Let's see here. Back to my scan here. I have the wrong stock in there. Yeah, 20 Jan 68 XLU. Sorry, that's why I have the wrong symbol. 68. We'll get this. All right. You notice right here 68 and then out here at 72. Now, part of the reason why this part wasn't on my scan is that I cut it off at 2,500, but you come in, you see, oh, well, here you'll see those are put together. You can look at time and sales and you can see, how things work together here, right? Trade at the same time. You can add that up, two prints, buying the 68, selling the 672 for 20 Jan. So some upside expectations here in XLU. 272, which is up here. That was my initial target going back a couple of weeks ago as we began to turn more bullishly on utilities. Recently pulled back, but this is that 223 to 261 target area. It's a 61% retracement. It's also the strike. You don't have to target 72 for Jan. You could go something a little bit closer, but looking for a bounce in XLU, and that probably would dovetail with strength in bonds. Finally, XLP, again, going back to the scan here, you'll see that 64 and 70. So again, buying the 64 put, buying the 70 put, selling the 64, 5,000 contracts. Again, looking for downside. So XLP is a bit more overextended, but again, we're looking for Jan right now, right? Downside of 64. So we may be seeing staples and utilities diverge. I'm a little bit more bullish on utilities in the near term, but this is laying out a lottery ticket type trade that says, hey, by January, I think the market's going lower, and specifically XLB being a bit overbought may have a chance to trade down here regardless whether the market rallies or not. So anyway, just some unusual option activity as we're trying to gain a picture of what's the market going to do in the coming weeks. Very uncertain, very unsettled, just like the midterm elections. And so we'll have to maybe just look for a little bit of confirmation to see where the market's going to get goosed in the coming days to weeks. But it does create a little bit of a window of opportunity for the S&P to maybe find support in the next couple of days, rallying into the next federal funds announcement, allowing the VIX to drift towards 20. That's the mainly bearish setup. If we can have that happen, that'd be awesome to be able to reset here at 4,000 to the downside, just like we did back here on the 12th, to really give you a more significant sign or signal that the bears are about to win out and the bulls are exhausted. Anyway, folks, wrap it up there. We'll catch you back next Monday for the video.